So now that you know a whole lot about trading, it's right that I introduce you to something that will keep you, a step ahead of a whole lot of other traders. When you do something, when you trade in the financial market, it does not matter which of them, whether it's crypto, whether it's stocks, whether it's forex, you need to have a trading plan. You need to be disciplined. You need to have a set of rules that you follow, a set of rules that guide you as a trader. This is what is going to help you, to eliminate greed most of the time, because as human beings, inherently we are really greedy set of people. We want to make money from every move available. We do not want to miss any opportunity, and when you are living like that, when you have that type of mindset, everything feels like a move, everything feels like a money grab. So when you start trading like that, you're going to take a whole lot of painful lessons from the market, because the market always has a way of rewarding the greedy. So your trading plan is what will keep you, throughout your trading journey. So let's go strictly into it. What is a trading plan? It's a reflection of the practices you want to employ in your trade. To put it simpler, it's your do's and don'ts. There is a very popular quote that says, those who plan to, or those who fail to plan, plan to fail. And then we do understand that your emotions, will get the best of you, especially when your money is on the line. And this can, make you, or will push you to take decisions that are not rational at all. And a trading plan is what helps you check that. So if you do not want that to happen to you, make sure that you are following a trading plan, that has been carefully, set out or put out, from experience, from things that you want to do, from things that you do not want to do. And then your trading plan will cover every single thing, from your entries to what you do when you are currently in a trade, to when you exit. It covers every single thing that has to do with your trading style, your trading pattern, and what you do, following every of your trade every day. Okay, so developing a personalized trading plan and sticking to it, are the two major ingredients of trading discipline. So yeah, these are the few rules, that should guide your trading plan. Okay, we have 10 of them here. Okay, so the first one is that it should be realistic. So you cannot be having a trading plan, that is not realistic at all. So maybe in terms of the returns that you want to have, you might tell yourself, I want to have a 500% return in a day. That's not realistic at all. So your trading plan must be what must be realistic. It must be time bound. So your trading plan must, indicate the time that you want to realize this certain thing, a time that you want to have this, or you want to weigh how much you've performed. Okay, so it must be time bound. It must be achievable, and then it must be measurable. It must be something that you can look at and understand how much you've moved from this level, how much you've developed yourself, how much of your trading equity that you have grown. Okay, so it must be measurable. You must be able to tell how much increase or how much decrease it has been, from when you started using the trading plan. So it must be clearly defined and not ambiguous. So, your trading strategy must also be included in your trading plan. So it must cover how you plan to trade, how you plan to take trades, what you plan to do in your trades. As a trader, as a professional trader, you have a system that you trust, and then a system that you trust comes with weeks, days, months of testing, back testing and forward testing. So you go, to your charts previously and try to see how that system has worked, how many entries, how many winning trades you would have gotten from that. Try to refine it, try to see the areas where you would have needed to, add something extra to it, or to stay out of the market. Okay, so you need to have a trading system as a professional trader, right? And that's the trading strategy that you need to include in your trading plan. It has to be shown there. Okay, so that every single day that you look at it, you understand that these are the strategy, or this is the strategy, depending on how many you have, because this is the market. You have to adapt to the changes that are happening. Okay, and then the next one is to set a risk level. So how much are you willing to risk per trade? How much risk are you willing to put on the line for every single trade you are taking? Are you going to sit and watch that risk play out, or take you out, if eventually the market is going to reach that level? Okay, or are you going to set a stop loss? But then you need to determine how many percent of your account you want to be risking per trade. Is it 2%? Is it 5%? Is it 10%? Depending on the account size that you have and the plans that you have for that particular account as well. Okay, so yeah, so trade preparation, how you prepare for your trades, how you prepare to take trades. Do you do your analysis ahead of the week? Do you do your analysis every single morning when you wake up? that should also be included in your trading plan. Your entry and exit rules, when the only confirmations that you enter a trade with, the only confirmations you exit a trade with should be included in your trading plan. And then at the end of the week, at the end of the month, depending on what you've determined to do, or when you've decided to review your trading plan, you should always analyze your performance. Okay, so that is it for the things that your trading plan should include. So let's move on to the next thing. Why should you have a trading plan? Okay, so the first one here, it says that trading is simpler with a plan than without one. Okay, so once you have a plan, you'll be able to follow it, you'll be able to gauge your performance, you'll be able to improve yourself, you'll be able to develop yourself. Okay, and then you stick with one thing. So it's easier to stick with one thing than to be carried away with every single thing that comes, with all the noise that comes, with everything that looks like a move, with everything that looks like is right. So trading is simpler with a plan than without one. Okay, so gauge your performance, identify problems and make corrections. This is one of the benefits of trading. So you'll be able to check out how much you've performed. Have you been able to achieve what you had in mind when putting out this trading plan? Okay, you gauge your performance, identify the things that are wrong with your trading plan. Is the problem from the strategies that you're using to trade? Is the problem from the trading plan? Is it not realistic? Or is the problem from you? Are you not waiting, to have your entry confirmations? Are you not waiting, or are you doing something wrong? So once you are able to identify the problems, you do what? You make corrections with regards to that. Okay, so a strictly followed trading plan, will help you reduce your number of bad trades. Okay, so once you journal every single trade that you take in the foreign exchange market, and then analyze it, whether it's a winning trade, whether it's a losing trade, to see if this followed exactly, followed your trading system, if you followed your plan right, you'll be able to reduce the number of bad trades that you take. So that means that every single trade that is a lost trade, you take a critical look at it, look at it over and over again. You'll be able to see something wrong with it, and then that information will help you to avoid that in the future. Okay, a trading plan will help prevent irrational behavior in the heat of the moment. This happens to almost every single trader, especially when you're starting out new. Every single thing seems like a move, and there's something we call FOM, or the fear of missing out in every financial market, not just foreign exchange. So you see a move happening, and it seems like if you don't get in right now, you miss that move completely, and then you get in, and then the market does not go in your direction. That is an irrational behavior, and that is bred, and that is birthed by what? Greed. The need to always go in there and make money immediately is what will make you take irrational acts like this. And then a trading plan is what will help you curb this and make sure that you don't do this again. Okay, so another one is the trading plan enables you to control only the things that you can control. So you will not beat yourself about the things that you cannot control, like the impact of fundamental news, things that do not have anything to do with you. So if you do your analysis properly, wait for your plans, your trading plan, everything to be ticked right before you get into a trade. If that does not go in your favor, you're not going to beat yourself about it because of what you followed everything on your trading plan. Okay, last one, a trading plan will instill a large measure of discipline into your trading. Okay, because gamblers do what? They lack discipline and a trading plan. Okay, and your trading plan is designed in such a way that if you take a wrong turn, your trading plan will tell you that what you're doing right now is absolutely wrong. Correct yourself, even while you are still on the move, even before doing it. Your mind is always going to beat you. And then there is this thing I do with my trading plan. My trading plan is printed and kept right beside my trading deck, so that every single day that I wake up for the past years, I'm staring at it. I can literally tell you the word, every single plan or every single thing that I have on my trading plan word for word, because I see it every single day. That is how important your trading plan is for you. Okay, so we are done with why you should have a trading plan. Let's just go, let me give you guys a sneak peek of my trading plan. This is not everything, but I decided to leave some things out, so it's not too much for you guys, because there's a whole lot of things you still need to go through before you develop your trading plan. But this is enough to get you started. With this now, you can understand how a trading plan should look like, and then how to formulate your own. Okay, so first off, I want to realize 100% of my equity every month. So the minimum equity I want to have at the end of the month is 100%. So if I start with $20,000, okay, at the beginning of the month, that I expect that at the end of the month I'm going to have what? $20,000 as an extra profit, so that I'll end with $40,000. Okay, that once you have a trading plan, once you have something like this, I now have to break this down to weekly targets. So if I need 100% in a month, that means I understand that I need to work at this, every single day and every single week. So that means that every week I need to do what? 25% of, my original or my equity when I started the month. Okay, and then once you have that understanding in mind, you can now break this into daily goals. So that means that every day we have 5 days a week to trade. Every day at least I should aim for 5%. This does not mean we do not trade every single day, because some days you just might not find the opportunity to trade. But then with this in mind, I now take trades with the mindset that today should at least give me 5%. If I have 5%, I'm happy. If I have higher than 5%, I'm okay with that, because some days you have just 3%, right? And on some days you have 12%, made by risking maybe just 2% per trade, maybe just 3% per trade, and maybe you have like 4-1 trades with 3% per trade, and then you've made the 12% for yourself. So some days are going to be like that. Some weeks are going to be way over 25%. Some weeks are not going to be up to 25%, but then at the end of the month, you are going to make sure that you have 100% of your equity at the end of the month. Okay. What's the next one? Number 2, I will not get into trades, or for more than 4 currency pairs at the same time. So if I'm in Euro USD, Euro JPY, okay, AUD USD, and maybe AUD NZD. If I have 4 trades running, I'm definitely not going to take another trade at that particular point in time. So I'm okay with this. For what this will help me do is to make sure that I do not get into unnecessary trades, and then I have the time to take a close look at the trade or the pairs that I'm trading. Take a close look, so that I'm not rushing to get into another trade and maybe line up 10 trades at once. And then it also helps you risk wise, because if you have only 4 trades running, you'll be able to take rational decisions compared to having way more than 4 running. And then next one, I make good use of stop losses and take profit in case I'm not available to watch the market. You already know what a stop loss and a take profit is. Okay, I cut my losses manually if I need to, even if the market does not go to my stop loss level. If I have more than 3 winning trades in a row or losing trades in a row, I take a break from the market and I reassess my trading strategy, take a close look at my trades and understand why those were lost trades. Okay, I will take out at least 60% of my balance to invest in other businesses such as e-commerce and real estate. And this comes when you start making a whole lot of money from foreign exchange. If I'm making just $500 at the end of the month, maybe you won't invest in an industry as big as real estate, but then you can take it out and invest in something else. But then these are the things that I take out money to invest in. So at the end of the month, I take out 60% of my balance to invest in other businesses. It's better when you have multiple sources for income. Okay, so I record my daily trading activities in my trading log to review them at the end of the week and decide how much I've performed and what I need to do ahead of the next week. And then I work every single week. I invest time into developing myself as a trader, okay, to make sure that my winning trades, for the next week are at least better than the previous week, okay. And then I understand and accept that the trading results that come out, okay, are as a result of my behaviors, are as a result of the things that I do. So I make sure that every single trading decision follows through with my plan, okay. And then my primary aim is to manage risks properly, whether it's when I'm already in the trade, whether it's before I get into the trade. I make sure that I have strict risk management rules put in place, okay. I will journal all my trades, okay. Trading journal is really important. Put out all the trades that you've taken, whether they are won trades, whether they are losing ones, with the exact entry and exit confirmations. Why did I get into this trade, and why did I exit this trade at this particular point? I write all of those things down and review them at the end of the week. Was this a wise decision? Because most times, because you have your money on the line, you might take some decisions that are not rational enough, or that were not the best decisions at the time. So I review that at the end of the week to make sure that I do not do that again, okay. And then my first start for any trading session is to check for the economic data releases that may impact open positions or potential positions that I want to get into, okay. And lastly, I outline the currency pairs that I want to focus on and my primary time frames, the time frames I'm going to take my confirmations from for an entry, okay. So this is just a sneak peek of my trading strategy. Like I told you guys, I print this and this is kept just by my trading desk to make sure that every single day I have a glimpse of it, okay. This is really helpful to me as a trader, and then this is why I'm releasing this secret to you as a trader. Right before you go into your journey and learn a whole lot more about trading and find out trading strategies and everything, this is really important. Make sure that you journal your trades, make sure that you have a trading system, make sure that you have a trading plan that is guiding every single one of your trading decisions in the foreign exchange market. See you guys in the next lesson.